Hello everyone, how are you? I hope all of you are doing really good. So welcome to another session of Financial Management Revision for CA Intermediate November 2023 attempt. First of all, I would like to say that guys, please share the videos with all your friends. There are very few people who are watching the videos and I don't feel it's really worth putting in so much efforts for you guys. Right? Like the first video was good. A lot of people was watching it. The second video, you people are not sharing it. That is one thing is absolutely clear. You people are not recommending it at all. Right? If you people are not going to support us, then simple. Why are we going to support you guys? Right? I will withdraw this series. That's very simple. It's a minute's work. I'll make the videos private. Right? So I'll see if you people support or not in the upcoming videos. Only then I'm going to continue. You people are asking for economics. You people are asking for costing. We are making so much of the preparations along with other batches for May 2024. Right? For you people only. And if you people are not going to share or spread a word about it, then it's no fun. No fun doing it. So it's totally your choice. It's totally your choice. We'll observe for the next 24 hours with this video a minimum of 1000 to 1500 views, likes. If you people can make it happen, I'm going to continue with all the series, costing, economics. I'll make all the series if you people are going to support us, right? Otherwise, we are putting so much of time, so much of efforts in preparation, how to do it, how to go about with it so that it is beneficial for you people, right? It's not worth it. Okay, anyhow. We are done with the first part, that is estimation of working capital. Now we'll be moving on to the second part, that is cash management. Now this is comparatively a simpler part. Why it is important for a business to manage the cash? Because the cash, this particular cash, if we talk about this, shows the liquidity of the firm. Right? This cash shows the liquidity of the firm. That is why this cash management is another important aspect of the working capital management. Right? Why it is a part of working capital management? Because cash is a part of current asset and current asset represents the working capital. On the basis of current assets, we calculate what will be the money that we will have for meeting our day-to-day expenses, right? So cash management is another important aspect of working capital, comparatively a simple management technique. Okay, so cash management, through cash management, we try to answer three basic questions to be answered through cash management: that how much to maintain the cash balance, a firm, how much of the cash balance is required by a particular business, whether you should keep 10,000 or whether you should keep 10 lakh rupees, how much amount of the cash should be there in the business, then how to finance the deficit in case you feel there is a shortage of the cash, then how you can finance that deficit, and how to invest a surplus. If your requirement of the cash is just 10,000 rupees and you have 10 lakh rupees as the cash, then what can you do with the remaining, the surplus money, what you should be doing with it, right? So he says the objectives of cash management are very simple: to avoid the situation of excessive cash or the inadequate cash, right? Excessive cash, what will happen in case of excessive cash? Sir, it will lead to opportunity cost. It will lead to opportunity cost. How, sir? How this excessive cash? For example, your requirement for cash, your requirement is 10,000 rupees and your available cash with you is, let's say, 10 lakh rupees. Right? Now you have what? You have excess cash of 9,90,000 rupees. Now this excess cash you could have deposited in the bank. What you can do with this? You could have deposited in bank and earned interest on it. Right? But because you are holding it in the form of cash only, this interest is what? This is now you are not earning. This is what is known as opportunity cost. And if there is inadequate cash means the shortage of cash. If there is shortage of cash, then that will hamper your day-to-day operations. Shortage will hamper your day-to-day operations. Clear, sir? So the basic objective of the cash management is you have to manage the cash in such a way that neither there is a situation of excessive cash nor there is a situation of shortage of cash, right? That is what he's saying, to maintain the optimum level of the cash at any point of time. That is, it should be an adequate cash. Whatever is your requirement, you might keep something above it as a safety margin, right? But it should be an optimum level. It should not be too much or it should not be too less. Clear? After that, for cash management purpose, what we prepare is we prepare cash budget. The cash budget is prepared, that what will be the sources from where we will be getting the cash, what will be the sources where we will have to do the expenditure in cash, right? So cash here means the liquid money available with the firm, right? Cash and cash equivalents, cash at bank is also a part of it, right? So total cash available. So cash budget is divided basically into two parts. One is the available cash. Second is the cash payments. Cash availability means the cash receipts. Here the total cash availability. If you talk about availability, availability is basically the receipts, right? Availability is basically the receipts. So how can you find out the total receipts? Opening balance of cash will be there. Yes, sir. In a particular month, let's say if in the month of April, you have a closing balance of cash, let's say 10,000 rupees. So in the month of May, this 10,000 will be what? This will become the opening balance of May. Right, so this is how the opening balance of the cash will be there. Then whatever the receipts are there, whether it is related to the business, whether it is related to the fixed assets, any kind of receipts which you are getting in the form of cash or the check, even if you are getting it in the form of check, you are going to deposit it in the bank, it is a part of the cash management only, right? So cash sale will be there, collection from debtors will be there, proceeds from the issue of shares, right? Proceeds from the sale of fixed assets, other non-operating income, sir. Anything that you are going to get in the form of cash, that is included in the cash receipts. And what is there in the cash payment? Any type of a payment that you have to do in the cash. Cash purchases of material, payment to suppliers of material, payment of wages, payment of factory overheads, admin expenses, selling distribution expenses, purchase of fixed asset, other non-operating expenses, any kind of things, any kind of expenditure to be done, any kind of a payment to be done in the cash, right? That is going to be there. Now, sir, what is the difference between these two? One is the cash purchases of material. The next is payment to suppliers of raw material. It means the same thing. No, sir. The payment to suppliers of raw material here means the payment for credit purchases. The payment for credit purchases, right? That is why it is written separately. Now, after the cash receipts minus the cash payments, you will either have the surplus of the cash or you will have the shortage of cash, right? Sir, if there is surplus, what we can do? If there is surplus cash with us, what we can do with the surplus cash? Sir, you can invest this surplus cash, invest in short-term securities. Invest in short-term securities. Sir, what are the short-term securities? Short-term securities are securities in which the investment is for a period of less than 1 year and which can be converted into cash at a quicker pace, right? At any point of time, if we need cash, we can sell those securities and convert it into cash. It is easier to convert these securities into cash rather than the long-term securities. And if there is a shortage of the cash, then what will you do, sir? You will, if you have any short-term securities, the shortage represents the deficit, and if you have some short-term securities, you will sell, you can sell your short-term securities and arrange for cash. Clear? So if there is a surplus, then you can invest in the short-term securities, and if there is a shortage, then you can sell those short-term securities and convert them into cash, right? So this is how the cash budget is to be prepared. Now, a few items that you will have to calculate in the cash budget, that you have to be careful about in the cash budget. Some of the items will be directly given to you in the paper, right? Like you have issued the shares, this is the amount that you will be receiving. You have sold the fixed asset, this is the amount that you will be receiving in this particular period, in this particular month. Now, cash budget is prepared for a particular period. It can be monthly, it can be half yearly, it can be quarterly. So cash budget is always prepared for a period, right? So if we talk about the cash budget, sir, it is always prepared for a particular period. Now, period can be anything. Period can be monthly, right? Period can be quarterly. Period can be semi-annually. So any period can be there, sir. Any period can be there, and the period will be specified to you. You will get to know in the question itself that what is the period for which we are preparing the cash budget, right? Now, a few things that will require the calculation in case of cash budget, and that is important. That is, first is the calculation of cash sales and the collection from debtors. It is quite a possibility that the collection from debtors is not directly given to you in the question, that what is the amount in a particular period that we are collecting it from the debtors, right? So how can you calculate it, sir? For example, this is one example. I'll give you one more type that how the question can be asked in the examination, right? January, February, March, sale in the units is there, unit price is there, that will give you the total sales, right? Out of the total sales, it will be given in the question that out of total sales, what is the volume of the cash sale, right? You can subtract the cash sale. The remaining part will be your credit sale, that is C minus D. Total sales minus the cash sales will give you what? Will give you credit sales. Now, this is the amount that is to be recovered from customer. Let's say this is 10,000 rupees, which is to be recovered from the debtors. Now, we will check our books. If there is any previous amount which is recoverable, that is the opening debtors, right? Plus, you say, sir, 15,000 is another amount that is yet to be recovered. So what is the total amount to be recovered? 15,000, right? And at the end of the period, when you checked your books, the closing value of the debtors was only 7,000. The total amount to be recovered from the debtors were 15,000. And at the end of the period, when you checked for your books, the value of the value of the closing debtors, that is the debtors, is 7,000. That means where is the remaining 8,000? 8,000 is the amount that you have recovered out of 15,000, right? Collection from debtors will be 8,000 rupees. So this is how the collection from debtors under the different period, right? So this thing represents what? The period of cash budget. Under the various periods, how we are collecting the money from debtors. Now, how the data will be given to you in the question, how they can give you the data in the question, and how do you have to proceed with it? Listen to it very carefully. How they can give you regarding the debtors? They will say, let's say there is a particular month, April, right? In the month of April, there is a credit sale. In the month of April, there is a credit sale of, let's say, 50,000. I'll take April, May, right? And June and July, right? There is a credit sale of 50,000. He says, what is the receipt? How you are going to receive that money from the debtors? He says 50% is received in the same month. 50% is received in the April itself. That is receipt. That is 25 is received in the month of April itself. And the remaining 50% you are going to receive in the month of May. That is after 1 month. The remaining 25,000 you will receive in the month of May. Now, let's say in the month of May, again 50,000 sales, credit sales you have done. He says 50% will be received in this month. Let's say it is 60,000, not 50,000. Just to be more clear, let's say it is 60,000. You have done a credit sale of 60,000. Now, the question says 50% of the sales is received in the same month and the remaining 50% in the next month. So how much you will receive in here, sir? In the month of May, you will receive 30,000. That is 50%. Another 50% you will receive here in the month of June. That is 30,000 rupees. Now, what will be the total receipts in the month of May? That will be 55,000. This is how the debtors will be calculated. Now, another thing, listen to it very carefully. The question might ask you to prepare the cash budget from April to July. The question might ask you to prepare the cash budget from April to July, right? But the data will be given from March. Data will be given from March. Why, sir? Why the data is given from March, whereas the cash budget is to be prepared from April to June? Because let's say in the month of March, you have done a sales of 40,000, right? The 50% you will be receiving in the month of March. Sir, the 50% you have to receive here in the month of April, you will have to receive 20,000. So that becomes a part of cash receipts of April, which is a period of cash budget. That is why, so in the April, it will be 45,000. That is why most of the questions of the cash budget, what you will find is the cash budget is required to be prepared for a particular period, but the data that will be given to you is beyond that period, right? The data that will be given to you is beyond that period, which is very, very, very important. Clear? So this is how it can be asked in the examination related to debtors. So you have to read the question very carefully. In cash management, what is one common mistake that the students have been committing is, one common mistake is that they do not read the question carefully, right? The question is very simple. When the payment is being received, you do not read the question carefully, and that is where we commit mistakes most of the times. The only important thing is cash management is that you should read the question, interpret the lines, that whether the payment is to be received, how much of the payment is to be received in the same month, next month, or next to next month. You have to read it with the open eyes and open mind. Okay, so the next part, this is related to debtors. Similarly, we have the calculation of cash purchases and the creditors. You might have to find out the creditors, right? How will you find out the creditors, sir? If the total sales are given, the GP is given, right? The cost of goods sold you can find out, that is sales minus GP, that will give you the cost of goods sold, right? In the cost of goods sold, you will have opening stock, closing stock, wages. From there, you will be able to find out what? Okay, F should be added. No, one second. There is a mistake here. The cost of goods sold that you will be getting here is, okay, this is correct. Try to understand. Not from here, but from here. All of us have studied about the trading account, isn't it? All of us have studied about the trading account. Yes, sir. Okay, what is there in the trading account, sir? You all know what is a trading account here. We write here buy sales, right? We write here buy closing stock. We write here to opening stock, to purchases, to wages, to GP, right? Now, if I say this sales is given to you and the gross profit is given to you, sales minus GP will give you cost of goods sold. Will give you what? Will give you the cost of goods which is sold, right? Cost of goods sold. Now, and if we add opening stock to it, we add opening stock, we subtract closing stock, and we subtract purchases from, wages from this cost, what we will be left with is the total purchases here. What we will be left with is the total purchases here. That is why the wages is also subtracted, because from the total cost, if you subtract the wages, then only you will get to know what is exactly the purchases here. So you will get total purchases. Out of the total purchases, what is the value of your cash purchases? It will be given in the question. From there, you will be able to find out the credit purchases, right? Now, this is the amount that you have to pay to the creditors, right? This is the amount that you have to pay to your creditors. Now, from the creditors, you will see if there are any opening creditors. Let's say from the fresh purchases, you have to pay 10,000. Then you will check your books. You say 5,000 is the old amount that is still pending to be paid. What is the amount payable? That is 15,000. Now at the end of the period, when you are going to check your books, you checked that only 7,000 is the balance of the creditors. That means 8,000 is the amount that you have already paid to the creditors. Payment to creditors will be I plus J, that is credit purchases plus opening minus closing, will give you how much of the payment in a particular period you have made it to the creditors. Clear? So this is regarding the creditors that we have. Now, how the question can be asked in the examination regarding the payment to the creditors. Again, like the debtors, you have to be very careful with the payment to creditors. For example, he says in the month of April, you want to sell, one second, in the month of April, sale, how much unit? 50,000 units, right? For that, you will need the raw material. For example, you will say raw material 50,000. Now, what he is saying? He says the raw material you will purchase 1 month earlier. Obviously, sir, if you want to sell the goods in the month of April, you will buy the raw material before April, isn't it? Yes, sir. This raw material is purchased in the month of March, let's say. It can be any month which is given. Right here, it is what? This is your purchases. So, this is purchased in the month of March. Purchased in the month of March, but the payment is done 1 month after the purchases, right? So payment is done in the month of April itself. So this will be the payment of April. So this is how the language will be done, that the raw material, whatever is the raw material required for the month of April, it will be purchased in the month of March, because obviously only then we will be able to do the manufacturing and sell the goods in the month of April. But the payment will be done 1 month after the purchase. So purchase is in the March, the payment will be done 1 month after that, the payment will be included in the month of April. And what we are concerned with is, we are not concerned with the purchases. We are concerned with the payment. When we are making the payment, that is the most important part for our cash management, right? That is what we are concerned with, that when we are making the payment, that is the most important part. Similarly, for the further months, it can be asked like that regarding the credit purchases. And be very careful, we have to deal with the credit purchases. If it is a cash purchase, the cash purchase will be in the same month, right? Cash purchase of the January, in the month of January, February, there is no issue in that. The only issue will come only when there are debtors or there are creditors for raw material, right? So this point is regarding the creditors that we have. Okay, make one correction here, sir. One correction, very important, sir. This part, plus minus is wrong. What you have to do is, D is to be subtracted and E is to be added to the cost. Right, you will add closing stock. For example, what we have done here is, small mistake here, the sales minus GP will give you here the cost of goods sold. Sales minus GP will give you cost of goods sold. Cost of goods sold plus closing stock minus opening stock minus wages will give you purchases. Sorry, a small correction here, right? Just make a small correction here, minus and plus, that's it. The rest everything is same. Okay, now, sir, one more area that was there. One query was asked by a student. I would like to share that particular problem. Not the whole problem, but what was the scenario in that case. Listen to it very carefully. What is the total, what is the scenario? What was the scenario? I could not recall the whole scenario, but something I remember, sir. Some part of it I remember. What is the scenario there? He says, there is that was regarding the debtors, as far as I remember. It was recently asked by one of the students, CMA students, and he has cleared the exams this time, right? But it was a good query, so I decided just clicked my mind that I should share it with you guys. He says there are sales in the February, there are sales in the March, right? There are sales in the April and so on, right? He says whatever the sales are done in the month of February, 70% will be received in the month of March and 30% will be received in the month of April. Whatever the sales are there in the March, 70% will be received in the month of April and the remaining 30% will be received in the month of May. So this was the kind of question that was given to us. That was the kind of question that was given to us. And the second thing that was given was that on 31st of March, the debtors were 26,000. On 31st of March, the debtors value was, pending debtors was 26,000. That is the amount that is recoverable. Another thing that he has given is that sales in February and March. It was one of the questions from my book only, right? He asked the query from our book only. The sales in February and March are equal. Now, the thing here was that when it is given on 31st of March, the debtors of 26,000. Now, this debtors included the debtors of February also, because 30% of the debtors of the February will be pending on 31st of March. That is to be received in April. And this included the debtors of March also. This is 30% of the February and 100% of the March. The problem was how to bifurcate, how to know that out of 26,000, what is the amount that is attributable to February and what is the amount that is attributable to March, because it was the total debtors which were given to you. And on 31st of March, the debtors of the February were also pending because 30% was to be received in April. That is on 31st of March, they will be pending. And whatever the payment of the March, it is to be received next year in April and May. That is 100% was pending. How to bifurcate it? Very simple, sir. And it is given the sales are equal. So I say let sales be X, right? So what is the sales that is pending for February? February plus March is equal to 26,000. What is the February sales which are pending? Sir, only 30% because 70% is received in the month of March. And what is pending of the March? Right, so from here 1.30x is equal to 26,000. So x value from here is 20,000. That means this March value is 20,000 and what is the February value? That is 6,000 out of it. Right? So in the month of April, when you are going to receive it, in the month of April, you are going to receive 70% of March. Right? That is 70% of 20,000, 14,000. The common mistake that you can commit here is when he says that you have to receive 70% of the March, it is quite a possibility that you take 70% of 26,000 because the question says this is the debtors which are pending in the month of March. No, sir. These are the debtors. These debtors include some of the debtors from the month of February also. And in the April, 70% is only from the sales of the March, right? And the remaining that you will pay is 6,000 rupees for the month of February. This is for February that you will receive here. That is 30% of 20,000, right? So total 20,000 amount you will receive in the month of April. So this was one query which was recently asked by one of the students. So I decided that it should be shared with you people so that you people do not commit mistake in the examination if such kind of a question is asked and you have the clear-cut idea that how to deal with these kind of things. Right, so with this, the cash budget is done, sir. The rest of the things, most of the things will be given to you. Some of the things you might have to calculate regarding the overheads. There might be some information which is given to you. You can go through with the module questions. That is very good. Right, you can just go through with the questions of the module. After that, the objectives of the cash management say that to maintain the optimum level of cash at any point of time. Sir, can we find out what is the optimum level of cash at any point of time? Yes, for that we have the Baumol model, right, which we have already studied in the cost accounting also, the EOQ model, that is also the Baumol model, sir. The same here, we can calculate the economic lot size is equal to the same model as EOQ, under root of 2 into A into T divided by H. A represents the annual cash requirement. T represents the transaction cost per lot. Transaction cost means if you withdraw the cash or if you convert the securities into cash, what will be the transaction cost every time you are trying to convert the cash. Right? H is the holding cost, that if you are holding too much of the this cash, what is the holding cost? It can be the opportunity cost also. The opportunity cost, the interest lost, this is also the holding cost, sir, because you are holding the cash, you are losing out on something, that is known as your opportunity cost, and that becomes your holding cost per annum. Right? So simple, sir, everything will be given to you. The only thing that you have to consider is it should be the annual cash requirement. In the question, you might be given the monthly cash requirement or quarterly cash requirement or anything else. Right? Transaction cost per lot and holding cost per annum. Number of lots per year, total requirement divided by economic lot size. Number of orders, we have discussed in the chapter of cost accounting. Economic lot frequency, how frequently you will have to convert the cash. Right, 365 divided by number of lots per year. Right, this is also known as economic cash balance. We call it as economic cash balance also. Right, then the total transaction cost and holding cost, you can do it this way also or in the normal way. What is the normal way, sir? The normal way is, what is your annual transaction cost? Annual transaction cost will be number of transactions multiplied by transaction cost per lot. Right, the same as we used to calculate the annual ordering cost. Then what will be your annual holding cost? Holding cost is nothing but your carrying cost, that is economic lot size divided by 2, average inventory of cash multiplied by what? The holding cost per annum, sorry, multiplied by the holding cost per annum. Right, so the total of this we can calculate as total annual transaction and holding cost. If you can remember this, under root of 2 into A into T into H, you can do it this way also, that is totally your choice, but I prefer this one. I prefer this method. Go for the detailed calculation of annual transaction cost, annual holding cost, and these questions have been asked in the examination, sir. This is important topic, optimum cash balance. This is important. Miller-Orr model, leave it, you don't have to do it. Right, Miller-Orr model is not important, not there. Earlier there used to be one question, it has been removed. Right, the only important one is the Baumol model that you have to remember. Two important topics in this. One is cash budget, second is the optimum cash balance. Right, only two important topics. One another topic is floats. Regarding the cash, there is another topic that is known as float. Now, what is a float? Floats, what do you mean by the floats? Very simple topic, sir, very simple topic. For example, you have a factory in Delhi. Right, there is a supplier who is situated in Tamil Nadu. Right, there is a supplier who is situated in Tamil Nadu. Now what is this? He is your supplier. He has supplied to you the raw material. He has supplied the raw material worth 10 lakh rupees. Right, now you want to make the payment of 10 lakh rupees and you want to make it by check. Right, now from Delhi to Tamil Nadu, how will you send the check, sir? You will post it. Let's say on 10th of April, you have issued and posted the check. You have issued and posted check. That is sent by speed post, you can say. Right, you are sending the check by speed post or by the courier. Now, when will Tamil Nadu receive this check, sir? Obviously, it will take from Delhi to Tamil Nadu. It will take at least 3 to 4 days. Right, let's say the check is received by the supplier on 14th of April. Check received by supplier. The check is received by supplier. Right, now on 15th of April, the supplier will deposit the check in the bank. Deposit check in bank. And when will this check get cleared? On 17th of April, check cleared. Right? Now, what is a float? The float means in your books, you have done the entry on 10th of 4. On 10th of April, you say the cash balance minus, we have issued the check, but the actual cash balance is still there in the bank, which you can utilize, The amount is not debited from your account. When is the amount getting debited? The amount is getting debited on 17th of April. So during this period, you can utilize this 10 lakh rupees for any of the operations. This is known as float money, right? This is known as float money. You can utilize this amount. You can utilize this amount till 17th of 4, till 16th of 4. But one thing you have to make sure that on 17th of 4, the funds should be available in your account so that this check get cleared. Right? Similarly, if we talk about from the perspective of this Tamil Nadu supplier, sir, he received the check on 14th of 4. He received the check on this date, but he cannot utilize the funds till 17th, till the funds are deposited in the bank. So from the Tamil Nadu supplier, again, this is a float balance which he cannot use. From our point of view, we can use this balance 10 lakh for 6 days. We can use it, but make sure that the balance is available on 17th of April. Whereas for the Tamil Nadu supplier, what is the float, sir? For him, the float is that the check is received on 14th, but getting cleared on 17th of April. Right? That 3 days float is there, where he has the money, he is entering in the books that check received 10 lakh rupees, but he cannot use that 10 lakh rupees. This is what is known as float money in terms of cash. There is only, I think, one question, Prachi limited question, I think there is in the ICAI module that you have to do it. That's it. Right? There is only one question related to the floats. Prachi limited question is there. I don't remember the name. I think it was Prachi limited question. So you just have to do that question. But the most important topics from this particular chapter, if you talk about, that is the optimum cash balance and the cash budget. Cash budget is simple, but it is prone to mistakes because if you are not able to interpret the question in the right way, right? You have to go slow. You have to interpret, read it with the open eyes, open mind, and then proceed with it. Right, so with this, the cash management is done. The revision of cash management is done. I told you this is a smaller segment, right? The next we'll move on to the receivables management in the next lecture, that how the receivables management is working, right? And we'll be using this, sir. We will obviously be using this part, very, very interesting part of the receivables management. And the receivables management is also comparatively easier. Only the small things that you have to focus on, right? And guys, please, it's a request, please share with all your friends and support the videos, watch the videos, like the videos. Only then, we also feel motivated to continue. Otherwise, there is not much of a motivation to continue and put in the efforts if you people are not going to support it. Right, please support this cause. So many free lectures we are providing, and for your preparation of November 2023 attempt, right? So all the best, guys. See you guys in the next lecture with the next chapter. Till then, stay safe, stay healthy, keep studying, keep sharing. Thank you so much.